Hello everyone, welcome to the market opening bell for Monday, November 3rd, your 10-minute guide to the stock market. Mainland China's official manufacturing PMI disappointed, coming in below expectations, while quarterly earnings from various companies swayed stock prices. Hong Kong stocks weakened on Friday, dragged down by profit-taking in technology shares. The Hang Seng Index opened 19 points lower, and the decline widened as the day progressed, eventually closing at its daily low of 25,906, down 376 points or 1.4%. The H-shares index fell 178 points or 1.9% to 9,168, and the Hang Seng Tech Index dropped 143 points or 2.4% to 5,908. Total market turnover reached 257.6 billion Hong Kong dollars. Southbound trading amounted to 125.1 billion Hong Kong dollars, with southbound funds net buying 8.719 billion Hong Kong dollars worth of Hong Kong stocks. Among the standout flows, southbound funds net bought 646 million Hong Kong dollars of Xiaomi and 464 million of Meituan. On the selling side, they offloaded 1.219 billion of Tencent, 711 million of SMIC, 473 million of Hua Hong Semiconductor, 365 million of Alibaba, 307 million of ZTE, and 294 million of PopMart. Notably, southbound funds have net purchased Xiaomi for 3 consecutive days, totaling 883 million Hong Kong dollars, and Meituan for the same period, totaling 1.437 billion. Conversely, they have net sold ZTE for 3 straight days, amounting to 717 million, and Tencent for 1.839 billion over the same time frame. For the week, the Hang Seng Index fell 254 points or nearly 1%, while the H-shares Index and Tech Index declined 2.1% and 2.5% respectively. Looking back at October overall, the Hang Seng Index lost more than 3%, the H-shares Index over 4%, and the Tech Index more than 8%. From a technical perspective, the Hang Seng Index has decisively broken below its 10-day, 20-day, and 50-day moving averages. The 9-day RSI has also slipped below the 50 midpoint, indicating weakening momentum and a likely test of the 25,600 level soon. In mainland China, the three major A-share indexes opened lower and trended downward, marking 2 consecutive days of declines. The Shanghai Composite closed at 3,954, down 32 points or 0.8%. The Shenzhen Component Index ended at 13,378, falling 153 points or 1.1%. And the Chinex closed at 3,187, down 75 points or 2.3%. Combined turnover in Shanghai and Shenzhen reached 2.32 trillion RMB. For the week, the Shanghai Composite edged up 4 points. The Shenzhen component rose 0.7% and Chinex gained 0.5%. In October, the Shanghai Composite rose 1.9%, marking its sixth straight monthly gain. However, both the Shenzhen component and Chinex fell more than 1%, the first declines in 5 months. The renminbi to US dollar midpoint was adjusted down 16 pips to 7.088. China's October official manufacturing PMI dropped to 49, below the expected 49.6 and down 0.8 percentage points from the prior months. Among the five sub-indexes, only supply delivery time remained above the critical 50 level, while production, new orders, raw material inventories, and employment all contracted. The non-manufacturing PMI edged up to 50.1 in line with forecast, but the composite PMI fell to 50, down 0.6 percentage points from the previous month. Mainland automakers have been releasing October electric vehicle delivery and sales figures. BYD reported 441,706 new energy vehicle sales, down about 12.1% year-over-year, with year-to-date sales at 3.7018 1.52 million units, up 13.88%, achieving 80.4% of its full-year target. XPeng delivered 42,013 vehicles, a new monthly record in the second consecutive month above 40,000. NIO delivered 40,397 vehicles, up 92.6% year-over-year, and another monthly record, with 17,143 under the NIO brand, 13,342 for Onvo, and 5,912 for the Firefly brand. Cumulative deliveries reached 913,182 by the end of October. Xiaomi Auto continued delivering over 40,000 units, with sources close to the company reporting shortened delivery cycles due to increased production capacity. The YU7 now takes 35 to 38 weeks, down 10 weeks. The YU7 Pro 34 to 37 weeks, down 8 weeks. And the YU7 Max 32 to 35 weeks, down 4 weeks. Li Auto delivered 31,767 vehicles, down 6.4% month-over-month, with cumulative deliveries at 1.462788 million. Geely sold 307,133 vehicles, up about 35% year-over-year, with year-to-date sales at 2.477 million, up 44% and 83% of its annual target. Great Wall Motors sold 143,078 new vehicles, up 22.5%, with year-to-date sales at 1.066436 million, up 9.87%, including 57,158 overseas and 46,155 new energy vehicles. Chery sold 281,161 vehicles, up 3.3%, with new energy vehicle sales at 110,346, up 54.7%, and exceeding 110,000 for the first time in a single month. Year to date, Chery sold 2.288929 million vehicles, up 13%, its best January to October performance ever. AIA reported third quarter new business value of $1.476 billion, up 25% year-over-year on a constant exchange rate basis and 27% on an actual rate basis, beating estimates of $1.405 billion and setting a third quarter record. 11 of its 18 markets posted double-digit growth. The new business value margin rose 6 percentage points to 58.2%, while annualized new premiums increased 15% to $2.55 billion. In Hong Kong, new business value surged 40%, driven by growth in local and mainland visitor segments. In mainland China, it rose 27%, with a 5% increase over the first 9 months. ASEAN markets grew 15%, led by a 20% rise in Thailand. For the first 9 months, new business value reached $4.314 billion, up 18% on a constant rate basis and 19% on an actual rate basis. The margin improved 4.6 percentage points to 57.9%, and annualized new premiums rose 11% to $7.492 billion. Today's newly listed stock, Mining Lam Tech, stock code 2718, closed at 295 Hong Kong dollars in the Philip Mart Grey Market last Friday, up 109.2% or 154 Hong Kong dollars from its IPO price. Per lot of 40 shares, that translates to a paper profit of 6,160 Hong Kong dollars, excluding fees. In the US, President Trump stated that if China intensifies its crackdown on fentanyl and its precursor chemicals, the US will remove the remaining 10% tariffs on Chinese goods tied to fentanyl. U.S. stocks rebounded on Friday. The Nasdaq closed up 143 points or 0.6% at 23,724. The S&P 500 rose 17 points or 0.3% to 6,840. And the Dow gained 40 points or 0.1% to 47,562. The VIX Fear Gauge climbed 0.53 points or 3.1% to 17.44. The Nasdaq Golden Dragon China Index tracking Chinese ADRs rose 43 points or 0.5% to 8,273. For the week, the Dow rose 0.75%, the S&P 500 gained 0.7%, and the Nasdaq advanced 2.2%. In October, the S&P 500 rose 2.3%, the Dow 2.5%, and the Nasdaq 4.7%. The Dow's first 6 months winning streak since 2018. Amazon reported better than expected quarterly results with cloud revenue up 20%, sending its stock up as much as 12.4% intraday and closing 9.6% higher. Apple also beat estimates with CEO Tim Cook forecasting at least 10% revenue growth this quarter. The stock opened up over 2% but closed down 0.4%. Netflix announced a 1-for-10 stock split and rose 2.7%. Tesla climbed 3.7%. Other big tech names were mostly weaker. Meta fell another 2.7% after Thursday's 11% drop. Microsoft declined 1.5%. Nvidia slipped 0.2% and Alphabet closed flat. Western Digital surged about 6% to a new all-time high after an AI-driven earnings beat, with adjusted earnings per share up 137% year-over-year to $1.78 and revenue up 27% to $2.82 billion, exceeding forecasts. Spot gold rose 3.74% in October, hitting a record $4,381.52 on October 20. Spot silver gained 4.29%, peaking at $54.4796 on October 17. According to the World Gold Council's Q3 2025 Global Gold Demand Trends Report released on October 30, despite record high prices, central banks accelerated gold purchases in the third quarter, netting 220 tons, up 28% quarter-over-quarter and 10% year-over-year. For the first 9 months, total net purchases reached 634 tons, below the exceptional highs of the past 3 years, but still significantly above pre-2022 averages. Our stock pick today is Weichai Power, stock code 2338. Weichai Power achieved operating revenue of 170.571 billion yuan in the first 3 quarters of 2025, a year-on-year increase of 5.32%. Net profit attributable to the parent was 8.878 billion yuan, up 5.67%. Basic earnings per share were 1.03 yuan. In the third quarter alone, operating revenue reached 57.42 billion yuan, up 16.1%. Net profit attributable to the parent was 3.23 billion yuan, up 29.5%. Both core performance indicators hit record highs for the same period in history, demonstrating the group's robust operational resilience and growth potential. Adhering to the concept of innovation-driven development, the group is advancing in parallel in both traditional power upgrades and new energy breakthroughs, achieving comprehensive product iteration and multi-dimensional technological leaps. As the foundation of the group's development, the power systems business has seen significant results in structural transformation, supported by a comprehensive technological layout. In the first 3 quarters of this year, a total of 536,000 engines were sold, including 188,000 heavy-duty truck engines. Traditional strengths such as heavy-duty trucks, and agricultural equipment also developed steadily, maintaining industry-leading positions. Among them, Shanxi heavy duty trucks sold 109,000 heavy-duty trucks in the first three quarters, up 18% year-on-year. New energy heavy-duty truck sales were approximately 16,000 units, up about 2.5 times year-on-year, firmly ranking at the forefront of the industry. Looking ahead, the group will seize opportunities from domestic market infrastructure development and equipment renewal policies, deeply cultivate core product segments, and expand market share. At the same time, it will expand exports of large bore engines and data center generator sets, accelerate channel layout and service upgrades, and achieve leapfrog growth in export business. On the other hand, it will leverage technological breakthroughs and differentiated advantages to continuously increase the market penetration of high-end products, strengthen R&D investment in cutting-edge fields such as hydrogen fuel cells, solid oxide fuel cells, and pure electric drive systems, and improve the mechanism for converting technological achievements. Overall, it will continue to advance three major business strategic transformations. One, continuously break through core technologies in new energy products, focusing on performance upgrades and efficiency improvements in power batteries to create high-end battery products suitable for multiple scenarios. Two, to deepen the integration and application of digital and intelligent technologies, unleashing data value through full process intelligent upgrades to build an efficient and collaborative digital intelligent development framework. Three, strengthen the development of full chain aftermarket service capabilities, enhance service model innovation and value mining, and build a high quality service ecosystem covering the entire life cycle. Suggested buy price 15.7 Hong Kong dollars. Target price 17.5 Hong Kong dollars. Stop loss 14.9 Hong Kong dollars. I do not hold the above stock.